Hello everyone, this is Kshitij. I have started this new YouTube channel for CMA and CA final students and tax professionals. I'll try to cover the Finance Act 2024 amendments in my first video. This is part 1 of that video, and I've covered 8 topics over here. The basic topics are being covered over here. The most demanding one is the capital gain explanations, whatever is there, and the TDS explanations, if any what changes are there. Coming to the first topic, whatever is there, two things are there actually, that two kinds of amendments effective from 1st April 2025, and assessment in brackets it is mentioned assessment 25-26, and some places it is given just the dates. From this date these amendments are brought in. So what is happening over here? What are these two changes? Actually, wherever assessment 25-26 is mentioned in the act, it is given that those amendments are applicable from the assessment to 25-26. It is not a transaction specific amendment, it is a general amendment which is brought in for the full year, no matter when the transaction is happening during the year. But if effective date is mentioned, that 23rd July, 1st October, if any date is mentioned of this sort, then that amendment is applicable. Transaction is specific from that particular date. If the transaction is happening up to that date, then old provisions of Finance Act 24 interim budget or Finance Act 23 will apply as amended. But if it is happening after that effective date, then new amendments as for Finance Act 24 23rd July budget, it will apply on that case. Coming to the first thing, tax rates. Tax rates 115 BSc 1A, it pertains to the old new regime. So what is happening over here? In the act it is mentioned that they've introduced now the new slab rates. 3 lakhs to 6 lakh, earlier it was up to 3 lakhs, 3 lakhs to 6, 6 to 9, 9 to 12, 12 to 15, and above 15. Now what they have done, up to 3 lakh basic exemption limit has not changed, but 3 lakhs to 7 lakhs 5%, 7 to 10 10%, 10 to 12 15%, 12 lakhs to 15 lakhs 20%, and more than 50 lakhs they have done it 30%. So just few 2-3 rates, slab rates they have changed. There is nothing logic behind it. So just one logic is that 7 lakh slab is changed just to make it part with the rebate limit, because rebate is applicable on 7 lakhs. But there is a catch, that now rebate, if you calculate the tax on 4 lakhs at 5%, so 20,000 is there, but rebate limit is still 25,000, and they have not changed anything in the rebate section. It is every day. So on special rated income, it is still a controversy whether the rebate will be applicable or not. No litigations have concluded till now. So for the time being, we'll see that these are the rates, and 25,000 will write in the provisions, but maximum is 20,000 rebate. Now coming to the next, salaried individuals. Salaried individuals, that amendment is applicable from assessment to 25-26, and it is applicable for your exams. SSCs, individual SSCs opting for the new regime can go for 75,000 standard deduction. They can claim 75,000 standard deduction. But if an SSC is opting the old regime, then for him the limit is 50,000 itself, and he cannot claim 75,000 standard deduction in that case. Now coming to profit and business income, business or professional income, this also five changes are there in this. So all these 5 changes are applicable from assessment to 25-26. The first one is the section 28. Section 28 was a controversial section in case of the income from house property. If SSC is there and he is claiming that he has a business income, his business is of letting out or renting out of house property, then he can claim it as a business income. There was a case law, Chennai Properties and Investments Limited. That case law allowed that SSC to claim it as a business income. And what SSC was doing, he was claiming it as business income and adjusting he was booking all the expenses as business expense, and taking it as a loss, and he was saving taxes over there. So this planning was superseded by the Finance Act 24, and now it is clear that income from house property cannot be treated as business income, even if the SSC is having the main business of renting out or letting out of house properties. Come to the second amendment to business and professional incomes. There are two things: contribution, employers' contribution to pension schemes. Employers' contribution to pension scheme can be thought of two ways. 80 CCD, in respect of the employee, he is claiming deduction under 80 CCD, and in case of the employer who is claiming business expense under 3614A. Here we are talking about only 3614A. What does it say? Employer contribution to pension as notified under 80 CCD. Pension scheme is notified under 80 CCD. So now what we are saying, whatever employer contribution is done, that will be allowed to the employer under section 3614A as business expense up to the limit of 14% of the salary. Now what does it say? That please note, read the point with please note, that this amendment for claiming business expense is effective from 1st April 2025, which means that amount contributed by employer in previous year 24-25 as we compute claim in the assessment year for expense incurred in previous year. Now what does it mean? This is just a line. What does it mean? That if SSC is claiming the expense, if SSC, whoever might be the SSC, employer might contribute voluntarily more than 10% of the limit, 14% of the limits. So if an employer is contributing more than 14% or more than 10%, suppose the person is paying 1 lakh salary to the SSC, sorry, SSC is paying 1 lakh salary to his employee, and he's deducting 10% of the salary as pension scheme. Earlier this limit was 10%, so I'm taking the example of the 10%. Now what he will do, he will deduct 14%. Suppose he was deducting 14,000 earlier also. Now also he is deducting 14,000. The SSC is deducting 14,000, and earlier also he was deducting 14,000. So while computing the taxable income of the SSC employer in the assessment year, we used to calculate, earlier we used to calculate only 10,000. We used to allow him only 10,000 as business expense, but now we will allow him 14,000 as business expense, because whatever he is contributing, if it is up to 14% of salary, that is fully allowed as business expense to the employer. He may contribute more also, but that is not the case over here. Now coming to the 80CCT portion, 80CCT will be covered under deduction under chapter 6 after some time. There is a clause that the central government employee contribution, normal contribution, those things will be covered later. Don't confuse those points over here. This is only about the claiming of business expense by the SSC. Why we are taking it in the assessment here? Why we are not saying that this clause is applicable for 1st April 2025? Whatever contribution is done after that period, contribution is done during the previous year, but calculation of taxability 3614A, whatever allowability, non-allowability, disallowability will be calculated in the next year, means the assessment year. So for this assessment year, this business expense claim whatever is, it is for the assessment year, so that's why it is applicable for assessment year. हम लोग कैलकुलेशन तो करते हैं, हम लोग ट्रांजैक्शन तो पहले कर लेते हैं प्रीवियस ईयर में, लेकिन जो कैलकुलेशन होता है कि अलाउ होगा नहीं होगा, वो हम लोग अभी देखते हैं. तो वो यहाँ पे वही बोल रहा है कि वो देखने टाइम पे लोग 14% तक अलाउ कर देंगे, भले ही खर्चा कितना भी हुआ, एक्सपेंस कितना भी किया हो, 10% to 12% to 14% तो मैक्सिमम 14% तक हम लोग उसको अलाउ करेंगे. अगर 17% भी करता है तो हम लोग उसको अलाउ नहीं करेंगे 14% से ज़्यादा ड्यू टू दिस अमेंडमेंट, अदरवाइज 10% होता पहले के लिमिट्स में. नाउ कमिंग टू नेक्स्ट सेक्शन, सेक्शन 37 सबसेक्शन 1. What does it say? It says that any illegal expenses are not allowed as business expense. Now two things are there. Once illegal expenses are talked about, so they made a change that expense, if any cases, income tax act has made a change that if any case is initiated against any of the SSC and that SSC is paying some amount, some expenses to settle the proceedings initiated against it, then that is also contravention, that is also the contravention money, and it is also disallowed under 37 subsection 1. Now what they have done, seen to this, why it came to their mind, why this clause came to the minds of the lawmakers, that the income tax, the life insurance businesses, whatever was sitting over there, life insurance SSCs, life insurance businesses, what they were doing, they were not making the payment. In some cases, the their customer was going for the litigation, and SSC's customer was going for the litigation and any court case, out of court settlement, whatever it might be. So they used to pay some expenses to settle the case. That whatever proceedings initiated against the SSC, they used to settle that, the life insurance businesses. So that is also the contravention. So owing to this amendment was brought in. This explanation was added actually, that this 37(1) will cover all this kind of illegal payments also. Earlier the tax planning was that this is not covered over in the act. Now coming to the indemnification, what is paid by the firm to its partners, whatever is the allowable limit. Earlier, if the book profit or loss figure was up to 3 lakhs, then the higher of 1.5 lakhs or 90% whichever is higher, and 60% of the remaining amount. This was allowed to the firm as business expense, allowable remuneration paid to the partners. Now what is happening? Now this limit has doubled. If the book profit or loss is up to 6 lakhs, then higher of 3 lakhs or 90% of the book profit. Earlier it was to the maximum limit extent on the earlier, for the first 3 lakh book profit, 2,70,000 was allowed maximum, because whether it can be 1.5 lakhs or 90% of the book profits. Now on 6 lakhs book profit, now it is allowed higher of 3 lakhs or 5 lakh 40,000, 90% of the book profit. So maximum allowed on the first 6 lakh book profit is 5 lakh 40,000 now. So this limit has doubled. No other changes are done. Now coming to 43D, what is changed in section 43D? Interest on bad and doubtful debts. What is happening? Earlier this section was applicable on all the SSCs like public companies, public financial institution, National Housing Board. All the SSCs were applicable, was claiming the benefit of this interest on bad and doubtful debts, and they were getting the allowance. Now what is happening? Public companies won't get this benefit. Public companies won't get this benefit over here. And further some reference to National Housing Board was given, that is also removed. Now these amendments are applicable for assessment to 25-26. Now coming to capital gains. What are capital gains? Capital gains, these are the major changes which has been brought by the Finance Act 24 in the Act. So these also, there are some clauses which are applicable from assessment to 25-26, that are whole year wise amendments, and some amendments are date specific, that from this date it is applicable. So actually one amendment is there that is applicable for the whole assessment year for the transaction when, no matter when the transaction is happening by the assessee. 47 clause 3, transfer of capital asset under gift or irrevocable trust was not treated as transferred earlier for any assessee. Now it has been amended to provide this benefit only in case of transfer by individual and HUF. So what does it say? It says, but earlier what used to happen, that any gift, any transfer is done in the nature of gift or irrevocable trust by any of the assessees, whether it is individual, firm, company, artificial juridical person, or any kind of person, any kind of assessee. It was allowed to the assessee that it is not a transfer, and it was not taxed as capital gain. Now what changes has been done by the act, that individual and HUF can claim this benefit till now also, but the companies and assessees other than individual and HUF cannot claim this benefit. Now if a company is transferring anything to any person as a gift or irrevocable trust, then it is considered as a transfer, and transactions of capital gain will apply on it as applies on other transactions. This is the changes which is brought in by the assessment year 25-26, which means it is effective for previous year 24-25. Now, no matter when the transaction is happening. Now coming to the date specific transactions, there are various transactions in the major tax rates and all are changing. Date specific, period of holding is changing. Date specific, it is 23rd July 2024, and it is applicable for your exams, and it is very important for the exams also. Now what is happening? Section 48. Section 48, what does it say? That indexation benefit. Section 48, see, indexation benefit, we are giving some options. We have heard the concepts that some option is given to the SSE, and we have heard that the indexation benefit is not available on land and building, or they can on different assets. But section 48 does not say these things. Section 48 only says that indexation benefit is not applicable if the transfer is done after 23rd July 2024, that is after the budget date. That is the only crux of section 48. Section 48 does not say when it will be applicable. It just says the simple thing. Now coming when it is applicable, section 111A, 112A, 112 will tell. And in case of non-residents, 115 ACA, 115 ACAD, these sections will tell how it is applicable. Now coming to the other point, period of holding. Earlier there used to be 3 period of holdings: 12 months, 24 months, 36 months. Now the criteria of 36 months is completely removed. This was covered under section 2 clause 42A. So now section 2 clause 42A does not cover the criteria of 36 months, and that provision is completely removed. Now only 2 kind of period of holdings are there: 12 months and 24 months. So what does this mean? That if asset is to be considered as 12 months, some assets that listed securities other than a unit was there. So if it is transferred before up to 12 months, then it is considered as a short-term capital asset. Otherwise it was considered as a long-term, and other assets were there. Now all the kind of other assets which is not covered under section up to 12 months, those are covered under 24 months. Now time limit for classification of long-term is only 24 instead of 36, and criteria is removed. In case of assets classified short-term capital assets for period of holding up to 12 months, we will also include listed units along with the other listed securities. Earlier listed units are not covered over there. So now earlier it was securities other than listed units, other than a unit it was mentioned over there. Now they are using the word listed securities. Whatever listed securities are there, if it is held up to 12 months, including the listed units also. So what they have done, it was listed securities other than a unit. What is the case? Other than a unit bracket words has been removed. So it is listed securities. Listed securities will also include listed units over there. And other assets on which 12 months criteria was applicable, that is zero component, all those things. So that are still applicable by the company. They can still take the benefit of short-term capital asset over there. And listed securities will include the listed units also. Unlisted units are still under 24 month criteria. Earlier it was under 36 months criteria. Now that criteria is removed. So land, building, jewelries, unlisted units, everything will come under 24 months criteria. Now coming to the tax rates, these are the basic things. Now period of holding and the indexation benefit, whether that applicable or not. Now coming to the tax rates, 3 sections are important: section 111A, 112A, and 112. Coming to section 111A, so what does it say? It says about the capital gain, short-term capital gain on listed securities, units of equity oriented fund, and business trust. That if any transfer is done before 23rd July, rate is 15%, we know that is the old rate. But if the transfer is happening after 23rd July 2024, then the rate of tax is 20% in the given case. Now coming to 112A, same case is that the rates are changing. Earlier this rate was 10%, now the rate is 12.5%. If the transfer is taking place, the transfer date is in 23rd July 2024. If it is before 23rd July, then 10%. If it is after 23rd July, then 12.5%. In both of these sections, 111A or 112A, indexation benefit is not applicable. But there is a catch, that section 112A contains one provision of the exemption of 1 lakh limit. Now this limit of 1 lakh has been increased to 1.25 lakhs by the act. What is done in the act, that suppose now a person will come and he will say that I transferred assets worth of, like, I have a capital gain of 5 lakh rupees before 23rd July, and after 23rd July I have transferred the asset of 4 lakh rupees. I want to claim 1 lakh here before 23rd July and for 1.25 lakh on transfer after 23rd July. This is not allowed. This is not the intention law to provide double benefit to the SSC. 1.25 lakh is applicable as we spoke in 36 subsection 1 clause 4a, that if any deduction, if any amendment or anything is brought into the act effective for the financial year, like for the whole year, it doesn't matter when the transaction has taken place, then that will be applicable from the assessment year. So this happens with this 1.25 lakh case, that this is applicable for the assessment year and not the transaction specific. So 1.25 lakh is the criteria over here for the full year and not for the particular transaction. This was only 1 lakhs. Now coming to 112. 112 is the major thing, which is the most confusing thing, and this was a controversial thing also. 112 is containing the four kinds of SSEs. But who are the four kinds of SSEs? Resident individual and HUFs, then domestic companies, then foreign companies, and other non-residents who are not companies, and any other resident. These four kind of people are there over here, SSEs over here. What does the act say? Now, the Finance Act 2024, that if any asset is transferred other than land or building, for resident individuals, we're talking about the resident individual and HUFs first. In the case of resident individual and HUF, if they are transferring land or building after 23rd July 2024, but it was acquired before 23rd July 2024, then they have an option that whether they can go for, see what has happened now in major changes. Earlier prevailing rate with indexation was there, and now what they have done, they have changed the rate to 12.5% but without indexation. So either you can apply this or that, either one can be applied depending on the date, but there is only one case where SSC has an option that which one he wants to apply. That is the discretion of the SSC. Other cases, transfer date is the criteria and you don't have any option. But now, where is the option? Transfer of land or building or both acquired before 23rd July 2024 but sold on or after this date. So if any land or property, land or building is acquired before 23rd July and sold after this date, 23rd July, then SSC has an option wherever less tax is there, whether it is 20% with indexation or 12.5% without indexation. So in that case, SSC can claim the benefit. Whichever is increasing the tax savings for the SSC, that option can be opted because these changes are done now. But when the SSC acquired the property to sell it with the intention to sell it within a period of 5 years, 10 years, or after some years he's shifting to some other place and is planning to sell it, so he was not aware that this drastic change will come in the Income Tax Act, and he was not aware, and due to this amendment there is a lot of difference in his tax liabilities. So this benefit is provided to the SSC over here. If it is not a land or building or both, if it is any other asset for resident individual and HUF, then it is same. If it is transferred before 23rd July, then 20% with indexation, but if it is after 12.5% without indexation, SSC does not have any option over here. Now coming to domestic companies. Domestic companies also same rate if transferred before 20% and with indexation, and if after 25% without indexation. For domestic companies, all kinds of capital asset transfer, whether it is land or building or any other kind of other than land or building, it is the same rate is applicable. SSC does not have an option over here. Coming to the foreign companies or non-resident non-companies, non-corporates, two kind of securities are there. One can be the securities of a private company. This amendment is there. The other points of those sections, whatever it is there, it is still holding good. In this video we have got only the amendment provisions, so don't get confused at what happened to the other provisions. They are still relevant for the assessment of 25-26 in the act. Now, unlisted securities of private company are sold, then what will happen over here? If it is transferred after 23rd July, it is same 12.5% without indexation. Earlier we used to get the benefit of indexation on these assets also for non-company, non-residents and foreign companies. Now what has happened? If it is unlisted securities of private company other than So if any security other than unlisted security is other, then 20% is applicable. But if it is unlisted security, then 10% is applicable with indexation. So this is one change, that after 2030 transfer, 12.5% without indexation is there, but earlier it was 10%. Now coming to any other resident, 3 points are to be taken care of over here. If it is any other asset, same thing, 20% with indexation of for transfers before 23rd July, and for after 23rd July 12.5% without indexation. But if it is after 23rd July, any transfer on or after 23rd July 2024 is taxed at 12.5% only, which is not covered any other places. If it is transferred before 23rd July, then and it is a listed security other than a unit before 23rd July, that other than a unit point was there in short term category. And also if which means that if a asset, coming back to 242A, 2 clause 42A, what is happening over there? If any unit is transferred, if any listed unit is transferred before 23rd July and it was held for a period of less than 12 months, then it won't be considered as short term, because before 23rd July 2024 this period of holding change was not applicable on the companies. So coming back to this section 112, any other resident who is having this listed securities for transfers before 23rd July, same thing, period of holding will apply in the same manner of any listed securities other than a unit or zero coupon bonds. That was also covered over there for 12 months, for 12 months criteria. Then tax will be maximum 10%. So now what they have done, if it transfers before 23rd July, then the maximum tax is 10%. And all other provisions, as I told, it will remain as it is same. Now coming to section 50AA. 50AA was introduced by the Finance Act. Earlier this section was applicable on market linked debentures and specified mutual funds. Now what has happened, the specified mutual fund definition has also been changed, and the scope of this section 50AA has been increased by the Finance Act 2024. But the change in the specified mutual fund definition is not applicable for your exams. 1st April 2026 is the applicability of that mutual fund definition, but we'll just give a brief of that. Now what is relevant for the exam is 50AA, that earlier what happened, market linked debentures and specified mutual funds, if it was transferred or it was redeemed for a period of short term also or a long term also, it was always treated as short term irrespective of the date of transfer, irrespective of the period of holding. Now it has increased its scope to unlisted bonds and debentures, unlisted debentures also. Coming to the applicability definition, they have changed it from 1st April 2026 because they have given time, because mutual funds has to make some investment 65%, 95%, 90%, 35%, like whatever criteria might be applicable on the mutual fund. So they have given the option to invest in the debt or money market instruments or any other mutual fund to the minimum of 65%. Minimum of 65% they can hold this investment by 21st April 2026, and this 65% should be calculated on annual average of daily closing figures and debt and money markets. So this is not applicable. So SEBI guidelines will be applicable over here. 1st April 2026 is the applicability date. Now coming to section explanations, one explanation is added to section 55 subsection 2 clause AC. This is a newly inserted. Now what is the case over here, that in the Finance Act this amendment is brought with retrospective effect from 1st April 2018. This amendment is brought from retrospective effect, so there is no point. This is third kind of amendment, that it is coming into force with retrospective effect. Any past date, any kind of past date can be there. Now this explanation A, sub explanation 3 clause AA is there. What is the case now? FMV, it is on the fair market value for the purpose of 112A. So for section 112A, we calculate the fair market value for some assets. It is talking about that fair market value for the purpose of 112A of the equity shares not listed on recognized stock exchange on 31st January 18, which became property of SSE in consideration of unlisted shares on 31st by way of transaction not regarded as transfer under section 47, but listed on subsequent to date of transfer, shall be computed as per grandfather rule as on 31st January 18. Basically, it covers offer for sale in case of an IPO which gets listed few days after the transfer. Now it is also subject to computation of FMV as on 31st January 18 as per the rules. Now what is it saying? We will try to understand it. Fair market value. In case of 112, it is talking basically about the IPO valuations, that if a person is purchasing, they are saying FMV for the purpose of section 112A for the computing of capital gain on listed securities. So they are talking of some securities which are listed at the time of transfer. At the time of transfer, the securities are listed. Now, what they are saying, FMV of the equity share not listed on recognized stock exchange on 31st January 18. Suppose any equity share is not listed on 31st January 18 on the recognized stock exchange, which became the property of the SSC when it was unlisted. So, if I invested in an IPO, it became a property. Suppose there was an IPO, 27th January, the IPO was introduced, and the listing date was 3rd Feb. So, on 27th January, I purchased some assets. So I invested the amount in IPO and I got the IPO on 29th. The allotment date was 29th. So on 29th of January, it became my property. That IPO, that assets, the securities or the shares of the company became my property. But when I purchased the shares, it was not listed on International Stock Exchange. Now what they are saying, for this kind of assets, what FMV should be taken of the equity share not listed, which became property, which became my property in consideration of unlisted shares on 31st January and 29th January, by way of transaction not regarded as transfer under 47. So it was not regarded as transfer. Investing in the IPO is not regarded as transfer. So that is the case now, and it is subsequently it is listed after the date of subsequent to the date of transfer, but listed on subsequent to date of transfer. So it is listed after the date of transfer or after the date it is received by me, shall be computed as a grandfather rule. So in that case also we have to apply the grandfather rule of 31/118, and we will take the fair market value as on 31st January 2018. So that's what it is saying, that it generally covers, basically it covers offer for sale in case of an IPO, which gets listed few days after the transfer. So it is generally transferred offer for sale. It is not the bulk purchase whatever we are investing in the market. It is offer for sale, that which gets listed a few days after the transfer. It is talking about only those kind of transfers. Other kind of transfers of IPO and all is not covered over here. It's talking about the unlisted shares which became my property, and it is being transferred, it is getting listed after a few days of the transfer. After a few days I got those assets. Now coming to other points of section 112A, 111A and 112, it will apply in case of non-resident taxation. 115AB, 115AC, AC, A, D and E. These 5 sections are there. It will apply as it is. Whatever the rates are applicable for resident individuals or all the other SSCs, it will apply in those cases also. Like if the capital asset, those were about 112A, 112 was about the capital assets in India. Now these are talking about the capital assets outside India. So it will apply mutatis mutandis on those cases. So these sections have been amended subsequently to provide the capital gain tax change in case of non-residents. Simultaneously, same nature of changes is done for transfer before 23rd July and on or after 23rd July 2024. Like capital gains tax earlier 10% and now subject to 12.5%, etc. etc. So whatever it is there, so same changes are done. Now coming that crux of the capital gain, the major things what we have to take care in the capital gain is that period of holding. 36-month period is gone. Now listed units are covered under 12 months time period. Then period of debentures and gold is reduced to 24 months for classifying. Earlier debentures and gold were considered as 36 months. Now they have been considered as 24 months. Then 111A, 112A, 120. Sorry, 112 rates have been changed, and its exemption under 112A is increased from 1 lakh to 1,25,000. Now one more thing is there, that this rate okay, this rate is changed for 1,25,000. It is applicable for the assessment and for the previous year. Now coming to the other head, income from other sources. What does it say? Income from other sources also assessment of 25-26, it is applicable. Now what does it mean? What changes are there? Two sections have been changed under income from other sources. What are those changes? 56 subsection 2 and clause 7b. That this section is newly inserted, says that if non-public company, this is the newly inserted section, that if non-public company like a private company or any other corporate SSC receives any consideration from any resident for issue of shares for more than fair value. Suppose a company is receiving any consideration from resident, private company is issuing shares to any person, and it is receiving amount consideration more than the fair value, then such excess amount shall be treated as income from other sources. Okay, this is treated as the sources, but now this won't apply from 1st April 2025, and it will not be treated from assessment 25-26. It will not be treated as income from other sources for the SSC. So this is a new section 7b is inserted over here, that if a private company is earlier this section was there, but now this it won't apply from 1st April 2025. That is inserted newly. A private if a private company is giving any shares, like issuing any shares to the person, and any amount more than the fair value is received by the private company SSC, then such excess amount shall be treated as income that should not be treated as income from other sources with effective from 1st April 25, and it should not be treated as income from other sources income in the computation of tax of privacy previous year 24-25, because it is applicable from assessment 25-26. Now coming to other amendment, last is the amendment that is not the newly inserted section. Whatever deductions for therefore pension scheme, family pension, not pension schemes, contribution, family pension, 1/3 of 15,000 was allowed earlier. Now that limit is 1/3 of 25,000, load of 1/3 of 25,000, whichever it is there. Earlier this limit was 15,000. This is also again, this is assessment year applicability. Again, you are calculating this reduction in case of computing the tax liability in the assessment year. So it doesn't matter when you are receiving the family pension amount, whether you are receiving before 23rd July or after 23rd July. This provision will apply and you will get 25,000 benefit or 1/3, whichever is lower. Now coming to deductions under Chapter 6A. What deductions changes have been done? Deductions also, some changes are done date specific, some are done year specific. So few changes are there which is year specific. Now we will try to link it to 36 section for clause 4A, that in case of individual opting for new regimes, the pension scheme in the case of employer it was allowed 14% contribution was allowed. Earlier it was 10% only. Now in case of individual opting for new regime, forget about the individual SSC who is opting for the old regime. Earlier what was happening, that whoever might be the SSC, old or new regime, 10% if the employer is central government and 10% was central government, then 14% was allowed. 14% contribution was allowed to the employee SSC. This employee is the SSC, but employer is contributing, government is contributing 14%, then they are allowed 14%. But if it was a private player, then private employer, then 10% was allowed. Now what has happened to the person, if the individual SSC is opting new regime, then in both the cases it is 14%, whether it is central government or whether it is private employer. 14% of the contribution made by the employer can be claimed by the SSC as deduction under section 80 subsection 2. But if the person is opting for old regime, then for central government employees it is still 14%, but for private employees it is still 10%, and that rate has not changed till now. Now coming to 80G, what does 80G say? Now in case of deduction, that is the deductions for donations and all. Now in case of deduction for National Sports Fund has been substituted with National Sports Development Fund set up by the central government, which means deduction for donating to NSDF will be allowed while computing total income. Earlier there was a National Sports Fund, for that deduction was allowed under 80G. Now what they have done, National Sports Development Fund, they might have created central government, or might have created new fund or the old one itself, or they might have merged two funds into one. So central government has notified this National Sports Development Fund for claiming deduction under 80G. If a new donation is done to this, it will be applied, it will be allowed. Coming to the next point, these are the deductions 80cc2 subsection 2 and 80G deductions under chapter 6A. Now coming to buyback of its own shares by the company. Earlier this buyback was not taxable in the hands of the company, not taxable in the hands of the shareholders. Now what they have done, what the act has done, that they have taxed it, it has been taxed in the hands of shareholders now. So see, here 4 sections are getting amended over here. First thing, this is applicable for 1st October 2024. So if any buyback is done before 1st October 2024, then it is not taxable in the hands of shareholder, it is still taxable in the hands of the company, or as 115 QA is applicable over there. We'll see what is 115 QA later. Now coming to what changes are brought for the buyback of shares by the company after 1st October 2024, on or after 1st October 2024. Section 222 subsection 22 clause 22 and subclause F is inserted with the act, that buyback of own equity shares by company will be taxed as dividend in the hands of shareholder at the rate applicable to such individual at slab rates. Full amount paid by company is to be treated as dividend for shareholder, and it is not limited to accumulated profits. What does it say? That if the company is buying back its shares after 1st April 2024 or on 1st October, not 1st April, 1st October 2024, then it will be treated as dividend in the hands of the shareholder. That shareholder is getting, will treat it as the shareholder is getting the dividend from the company, and slab rate will apply. No special rate will apply on this. The slab rate, normal dividend income, how normal dividend is taxable in the hands of shareholders. Now this will also be treated as taxable income, and full amount whatever is paid by the company should be treated as dividend, and accordingly slab rate should be applied. Full rate is income because the company is not incurring any expenses for this purpose for earning this dividend income. So full amount whatever the company is paying to the SSC is treated as dividend, and it will be taxed at the slab rates. This is the first change brought in by this buyback. So now what is the capital gain will be there, because it is earlier the capital gain used to rise whenever the company was whenever the capital gain will not arise on consideration 46A. What does 46A say? Capital gain will not arise on consideration received by shareholders on buyback of shares by the company on after 1st in 2024. Earlier, when the company used to pay the amount of buyback to the shareholders, it was treated as capital gain earlier. Now no capital gain will arise under 46A on the buyback of shares because it is treated as dividend income for the companies. Now coming to section 1034, some exemption was provided over there. Exemption of amount received by shareholders from company paying tax under 115 QA on account of buyback of shares is not available for buyback on after 124. And 115 QA, this section for taxation of income distributed by company is not applicable on buyback done on or after 2024. This means that two sections, this 10 subsection 34A and 115 QA is interlinked. How can we see it? That earlier what used to happen, companies, domestic companies or whatever companies is paying the dividends, they used to pay tax under 115 QA. Now what has happened after this on buyback, they used to pay taxes on 115 QA, under 115 QA for those taxes, so those buyback. Now whatever income they are distributing, the company has to pay tax on it. Now this is not applicable in case of buyback. The company is not paying tax, otherwise it will be double taxation. So if any income is distributed by the company, that is dividend, so this will include 222F also. If any income is distributed by the company, no change is done over here in the definition. Whatever income company is distributing as dividend should be taxable by the company. That is a simple logic. It should be taxable by the company. But now buyback is taxed in the hands of the shareholders. So on that buyback, this provision 115 QA will not apply. Company won't pay any taxes on this under 115 QA. Company is distributing the profit. It is treated that buyback is treated as dividend. Company is distributing the profit. Dividend is the distribution of profit. Company is distributing it, but still the company won't pay taxes on it if it is pertaining, if that dividend is pertaining to the buyback, as by the new 222F is inserted, and it is done after 1st April 2020, 1st October 2020. This 115 QA will come into role. Now coming to 1034, how is it interlinked with 115 QA? Exemption of amount received by shareholders from company. Whatever amount shareholders are receiving, the company is paying tax under 115 QA on the dividend distributed, whatever income is distributed, and exemption of amount received by shareholders. So shareholder is receiving any amount on account of buyback is not available. So this exemption is also not available. Now what is the case? अब यहाँ हिंदी में थोड़ा समझते हैं कि कंपनी 115 QA में टैक्स पे करती है. कंपनी क्या कर रही है यहाँ पे 222F, ये बाईबैक का एक बार फिर से समझने का कोशिश करता है. कंपनी क्या बोलती है कि अगर कोई भी अमाउंट कंपनी पे कर रही है किसी भी शेयर होल्डर को ऑन बाईबैक ऑफ शेयर्स, कंपनी अपने शेयर को बाईबैक करती है, कंपनी अपने जो शेयर्स लिस्ट कंपनी दी हुई थी पब्लिक को बाईबैक करना चाहती है, तो वो शेयर होल्डर्स को कुछ कंपनसेशन पे करेगी, उसका अमाउंट पे करेगी. वो अमाउंट बाईबैक ऑफ शेयर्स का अमाउंट है. वो अब बोलता है 222F नया सेक्शन इंट्रोड्यूस करके बोला गया कि ये अब शेयर होल्डर्स के हाथ में डिविडेंड का लाएगा. इट विल बी डिविडेंड इन द हैंड्स ऑफ शेयर होल्डर. शेयर होल्डर्स को डिविडेंड की तरफ इस पर टैक्स पे करेंगे एट स्लैब रेट्स, कोई स्पेशल रेट नहीं लगेगा. अब बोला गया कि लेकिन डिविडेंड अगर है तो डिविडेंड सेक्शन 115 QA में कंपनीज उस पर टैक्स पे करेगी. सेक्शन 115 QA बोलता है कि अगर कोई डिविडेंड कंपनी डिस्ट्रीब्यूट कर रही है तो उस पर कंपनी को टैक्स पे करना पड़ेगा. लेकिन अब ये 222F क्या हो रहा है यहाँ पर, इस प्रोविजन की वजह से 222F में जो डिविडेंड कंपनी पे कर रही है शेयर होल्डर्स को, वहाँ पर अब ये टैक्स 115 QA की वजह से कंपनी पे भी लग रहा है. 115 और 150 की वजह से कंपनी पे भी लग रहा है, 222F न्यू सेक्शन की वजह से शेयर होल्डर्स पे भी टैक्स लग रहा है। अब कंपनी ने क्या बोला कि अब इसका टैक्स जो है, अब फाइनेंस एक्ट ने क्या बोला कि अब इसका जो टैक्स है 115 QA में इसको हम लोग रिमूव कर देंगे। अगर बाईबैक या डिविडेंड 1 अक्टूबर 2024 के बाद दिया गया तो हम लोग उसको रिमूव कर देंगे। अगर पहले का है तो कंपनी टैक्स पे करेगी उस पर, कोई भी डिस्ट्रीब्यूशन ऑफ डिविडेंड होगा तो। अब बोलते हैं कि कंपनी को जो शेयर होल्डर्स को पैसे मिलते थे उसका एग्जेम्पशन मिलता था 1034A में। अगर कंपनी पे कर रही है टैक्स 115 QA में तो शेयर होल्डर से हम लोग टैक्स नहीं लेते थे। तो कंपनी अगर पे कर रही है और डिविडेंड डिस्ट्रीब्यूट कर रही है तो हम लोग शेयर होल्डर्स को 1034A में उसका एग्जेम्पशन प्रोवाइड करते थे। तो ये एग्जेम्पशन भी अब एप्लीकेबल नहीं होगा बाईबैक ऑफ शेयर्स के केस में फ्रॉम 1 अक्टूबर 2024। एंड 46A अब आएगा यहाँ रोल पे, एक अलग से आता है 46 से कि अब अगर शेयर होल्डर्स का केस है, शेयर होल्डर्स को लमसम अमाउंट अगर कंपनी से मिलता है तो वो ऑलरेडी हम बोल चुके 222F में डिविडेंड की तरह टैक्स होगा, तो अब उस पर कैपिटल गेन भी राइज नहीं होगा हमारा। लेकिन शेयर होल्डर ने कुछ पेमेंट किया होगा उसे खरीदने के लिए, तो वो हमारा कैपिटल लॉस बन जाएगा और उसको हम आगे चल के उसको सेट ऑफ कर सकते हैं द सेम मैनर अप टू 8 years। सो व्हाट वी कैन डू इन 46A, दिस इज not a capital gain now. This is not a capital gain, but we might have incurred some amount for buying those shares. What about the cost of acquisition of those shares? We can claim it we can carry it forward and we can claim it as a capital loss, long-term capital loss. That is a long-term or short-term, it depends on the period of holding. So now it is a capital loss for you and you can claim it for the pertaining 8 years, and if any gain is there short-term or capital long-term, then you can set it off over there. Coming to the overall interpretation, buyback of shares of companies, extinguishment of existing shares by shareholders, and the cost of acquisition will be treated as capital loss allowed to be carried forward for 8 years since full value of consideration is nil for such extinguishment. So, company is extinguishing its right and no compensation is received. Full value of consideration is nil, so that is a capital loss for the company. 0 minus cost, that is negative figure, that is a capital loss for the company. But no expense will be allowed under this dividend income. Now, before we start details, just a brief of some important points, whatever we have covered over here. टैक्स रेट्स जो थे 115 PSC1A के वो हमने चेंज किए हैं, इसमें कुछ मेजर वैसा कुछ नहीं है। सैलरीड इंडिविजुअल्स हैं, सैलरीड इंडिविजुअल्स में 75,000 न्यू रिजीम में अलाउड है, 50,000 ओल्ड में अलाउड है। प्रॉफिट अगेंस्ट बिजनेस प्रोफेशन है 5 अमेंडमेंट से 28 सेक्शन 28 में इनकम फ्रॉम हाउस प्रॉपर्टी में चेन्नई प्रॉपर्टीज एंड इन्वेस्टमेंट्स लिमिटेड के केस लॉ को हमने ओवररूल किया था, और अब वो हमेशा मतलब बिजनेस इनकम नहीं ट्रीट हो सकता, कभी भी बिजनेस इनकम ट्रीट नहीं होगा, इनकम फ्रॉम हाउस प्रॉपर्टी ही उसको हम लोग मानेंगे, चाहे बिजनेस हम लोग का हो रेंटिंग का तो भी। 36.4 में बोले थे कि एम्प्लॉयर कंट्रीब्यूट करता है कोई भी अमाउंट, तब उसको बिजनेस एक्सपेंस से 14% तक अलाउ हो जाएगा। लेकिन हम लोग कैलकुलेशन कंप्यूटेशन हम लोग नेक्स्ट ईयर कर रहे हैं, अलाउंस डिसअलाउंस नेक्स्ट ईयर देख रहे हैं, तो हम लोग इससे कोई मतलब नहीं है कि ड्यूरिंग द ईयर कितना हम लोग कंट्रीब्यूट किए। इसी से रिलेटेड सेक्शन 80CCT में एम्प्लॉय एसएससी को डिडक्शन मिलता है कि पहले उसमें दो चीज़ें कि ओल्ड रिजीम ड्यू रिजीम एंड गवर्नमेंट एम्प्लॉय नॉन गवर्नमेंट एम्प्लॉयज़ है। गवर्नमेंट एम्प्लॉयज़ 14% क्लेम कर सकते हैं दोनों ही केस में, चाहे वो ओल्ड रिजीम हो चाहे न्यू रिजीम हो। ओल्ड रिजीम में और पहले क्या था, ओल्ड रिजीम न्यू रिजीम में नॉन गवर्नमेंट एम्प्लॉयज़ को सिर्फ 10% रिडक्शन अलाउ होता था, लेकिन अब न्यू रिजीम के केस में नॉन गवर्नमेंट एम्प्लॉयज़ को 14% रिडक्शन अलाउ होगा। लेकिन ये चेंज हमारा 36.4A को इम्पैक्ट नहीं करेगा। न्यू रिजीम ओल्ड रिजीम को एम्प्लॉयर कोई भी रिजीम ऑप्ट करे, एम्प्लॉयर कैन क्लेम 14% ऑफ द सैलरी वट एवर इट इज़ कंट्रीब्यूटिंग ही कैन कंट्रीब्यूट अप टू 14, ही कैन क्लेम अप टू 14% तक वो क्लेम कर सकता है। और ये चेंजेस जो है फाइनेंशियल ईयर में लगेंगे 24-25, क्योंकि कंप्यूटेशन नेक्स्ट ईयर हो रहा है, तो ट्रांजेक्शन कभी भी कमिंग फॉरवर्ड। अब एक 37.1 में हम लोग एक्सप्लेनेशन ऐड करते हैं कि लाइफ इंश्योरेंस बिजनेस हम लोग का कोई भी कॉन्ट्रीब्यूशन वगैरह होता है उसके लिए पेमेंट करती है कि आउट ऑफ कोर्ट सेटलमेंट कर ली या प्रोसीडिंग वगैरह हो गया उसके बाद में सेटलमेंट कर ली एक्सपेंसेस पे करके, तो उस केस में भी हम लोग उसको कॉन्ट्रवेंशन ऑफ लॉ में ही उसको पेमेंट मानेंगे और उसको हम लोग लीगल एक्सपेंस बोल करके 37 सबसेक्शन 1 में डिसअलाउ ही करते हैं। पार्टनर लिमिटेशन में कोई मेजर चेंज नहीं था, बस लिमिट्स डबल हो गए हैं। 43D में भी कोई मेजर चेंज नहीं था, पब्लिक कंपनीज पर भी अप्लीकेबल नहीं हो गया, नेशनल हाउसिंग बोर्ड का रेफरेंस रिमूव कर दिया गया है। कैपिटल गेन इंपॉर्टेंट था, कैपिटल गेन में इररिवोकेबल गिफ्ट का जो सारे एसेसीज को पहले अवेलेबल था, जो बेनिफिट की ट्रांसफर नहीं माना जाएगा, अब वो सिर्फ इंडिविजुअल एचयूएफ में है कि ट्रांसफर नहीं माना जाएगा, बाकी कोई एसेसी अगर गिफ्ट इररिवोकेबल ट्रस्ट किसी को भी देता है तो वो हमारा ट्रांसफर माना जाएगा। फिर ये होता है फाइनेंशियल, ये पूरे असेसमेंट ईयर पे ये एप्लीकेबल है, ड्यूरिंग द ईयर कभी भी करे। अब कुछ ईयर डेट स्पेसिफिक थे कि 23 जुलाई के पहले ट्रांसफर होंगे तो इंडेक्सेशन बेनिफिट मिलेंगे, 23 जुलाई के बाद होंगे तो 12.5% लगेंगे, इंडेक्सेशन बेनिफिट नहीं मिलेंगे। पहले वाले केसेस में क्या था कि ट्रांसफ़र था, इंडेक्सेशन बेनिफिट नहीं मिलेगा, 48 डायरेक्टली वो बोलता है, लेकिन कैसे नहीं मिलेगा वो आगे के सेक्शंस बोलेंगे। 242 में बोले थे कि 36 मंथ्स का क्राइटेरिया खत्म हो चुका है, और गोल्ड वगैरह के केस में, डिवेंचर्स वगैरह के केस में भी 36 मंथ्स नहीं है, तो 24 मंथ्स के क्राइटेरिया में उनका भी पीरियड ऑफ होल्डिंग कम हो चुका है। और एक लिस्टेड यूनिट था जिसका पीरियड ऑफ होल्डिंग लॉन्ग टर्म से शॉर्ट टर्म हो गया था 12 मंथ्स वाले क्राइटेरिया में, कि पहले वो 24 मंथ्स से, पहले वो 36 मंथ्स में आता था कि 36 मंथ्स तक अगर होल्ड करते तो उसको हम लोग शॉर्ट टर्म मानते थे, 12 मंथ्स वाले नहीं मानते थे। अब उसका है कि 12 मंथ्स तक भी अगर हम उसको होल्ड करते हैं तो हम उसको शॉर्ट टर्म मान सकते हैं, कोई प्रॉब्लम नहीं है उसमें। 111 में 15% 20% कर देगा। डेट ऑफ ट्रांसफर से 112 ए में सेम चीज़ किया गया था रेट्स के लिए, लेकिन वहाँ पे हमें 1 लाख और 1,25,000 का जो बेनिफिट इंक्रीज़ हुआ वो हुआ था कि जो एग्जेम्पशन मिलता है वो 2 बार नहीं मिलेगा। ट्रांसफर पहले के ट्रांसफर के लिए 1 लाख और बाद के ट्रांसफर के लिए 1,25,000 मिलेगा, ऐसा नहीं, सिर्फ 1,25,000 करके मिलेगा। 112 थोड़ा सा मेजर था कि रिसेंट इंडिविजुअल एचएफ को लैंड बिल्डिंग में बेनिफिट मिलता है कि दोनों में से कोई भी एक ऑप्शन ऑप्ट कर सकते हैं, अदर दैन है तो वही 20% विद इंडेक्सेशन, 12.5% विदाउट इंडेक्सेशन। डोमेस्टिक कंपनी के केस में सेम पॉइंट है, कोई भी तरीके का इनकम हो वही दो होता है, पहले के ट्रांसफर और बाद के ट्रांसफर पे। एक नॉन डिस्टेंट के केस में अगर प्राइवेट कंपनी की अनलिस्टेड सिक्योरिटीज को ट्रांसफर करते तो 10% विद इंडेक्सेशन मिलता है अगर ट्रांसफर बिफोर 23 जुलाई है तो, अदरवाइज इट इज़ 20%। और अदर पॉइंट्स भी एज इट इज़ थे जो ऐसे रहेंगे। 50A बोला था कुछ डेफिनेशन में चेंज हुआ जो हमारे एग्जाम के लिए एप्लीकेबल नहीं है, एंड बोले थे कि मार्केट लिंक डिवेंचर और स्पेसिफाइड म्यूचुअल फंड के साथ साथ अनलिस्टेड बॉन्ड्स एंड अनलिस्टेड डिवेंचर्स की रिडेम्पशन को भी हम लोग हमेशा शॉर्ट टर्म मानेंगे। ये 2 एसेट में इसका स्कोप बढ़ाया गया है और कुछ नहीं किया गया है, मेजर अमेंडमेंट नहीं है। 55 क्लॉज AC, इसमें कुछ चेंजेस है कि अगर IPO वगैरह है, कुछ ऑफर फॉर सेल का ऑफर फॉर सेल का IPO अगर होता है तो उसकी लिस्टिंग कुछ दिन बाद होती है। तो जब पर्सन कोई भी एक्वायर करता है शेयर्स को, कोई पर्सन अगर अनलिस्टेड शेयर्स को ही एक्वायर करता है, उसको ओनरशिप में अनलिस्टेड शेयर्स आते हैं, वो ट्रांसफर कुछ दिन बाद लिस्टिंग होती है ऑफर फॉर सेल के शेयर्स। तो उस केस में क्या होता है, ऑफर फॉर सेल ऑफ शेयर्स जब होते हैं तो उसमें हम लोग 31 जनवरी 2018 का ही ग्रैंडफादरिंग रूल लेंगे। ये हमारा रेट्रोस्पेक्टिव अमेंडमेंट है, ओनली रेट्रोस्पेक्टिव अमेंडमेंट एप्लीकेबल फॉर May 25 एग्जाम्स। तो यहाँ पे हम लोग उस तरीके से लेते हैं। और बाकी कोई भी सेक्शन है नॉन रेजिडेंट्स के लिए 115A, 115AC, 115AC, AD एंड E, तो इसमें भी सेम रिलेवेंट अमेंडमेंट्स लगेंगे, रेट चेंजेस के जो अमेंडमेंट्स हैं। फिर उसके बाद हमने पढ़ा था इनकम फ्रॉम अदर सोर्सेज के 56 सबसेक्शन 27B में कि अगर कोई भी इनकम नॉन पब्लिक कंपनी अगर कोई कंसिडरेशन रिसीव कर रही है मोर देन फेयर वैल्यू, तो उसको हम लोग 1 अप्रैल 2025 के बाद से हम लोग उसको इनकम फ्रॉम अदर सोर्सेज नहीं मानेंगे। फिर हम लोग बोले थे कि डिडक्शन अगर होता है जो 57(2)A का, तो उसमें हम लोग 15,000 का पहले लिमिट था, लोअर ऑफ 15,000 मिलता था फैमिली पेंशन में डिडक्शन, अब 25,000 तक मिल सकता है। लोअर ऑफ लिमिट को 15,000 से 25,000 कर दिया गया। डिडक्शन अंडर चैप्टर 6A में 2 डिडक्शन हम लोग देखते थे, 80CC2 जैसे बोला 14% 10% वाला, एंड 80G में बोला कि नेशनल स्पोर्ट्स फंड कुछ था उसमें मिलता था डोनेशन में, लेकिन अब उसका नाम चेंज हो गया नेशनल स्पोर्ट्स डेवलपमेंट फंड, तो उसमें डोनेशन देने से हम लोग को डिडक्शन मिल जाएगा। अब बाईबैक था, बाईबैक थोड़ा सा कॉम्प्लेक्स चीज़ था, बाईबैक 4 सेक्शन को अफेक्ट कर रहा है। बाईबैक बोला कि कोई भी कंपनी अगर डिविडेंड डिस्ट्रीब्यूट करती है तो 115QA में उस पर कंपनी टैक्स पे करती है, और उसका एग्जेम्पशन शेयर होल्डर्स को मिल जाता है। 10 सबसेक्शन 34A में उसका एग्जेम्पशन शेयर होल्डर्स को मिल जाता है। लेकिन 222F न्यू सेक्शन इंसर्ट हुआ और वो बोला कि कंपनी डिविडेंड डिस्ट्रीब्यूट करेगी, कोई भी अगर बाईबैक पे कंपनी पेमेंट करती है शेयर होल्डर्स को तो वो हमारा डिविडेंड बन जाएगा। तो वो जब अगर डिविडेंड बना तो 115QA 1034A दोनों रोल में आएगा, कॉन्ट्राडिक्शन होगा, डबल टैक्सेशन और डबल एग्जेम्पशन बेनिफिट यहाँ पे आ जाएगा। तो 115QA बोला अगर बाईबैक होता है 1 अक्टूबर 2024 के बाद में या उस दिन, तो उसको हम लोग 222F के हिसाब से डिविडेंड मानेंगे और शेयर होल्डर्स को स्लैब पे टैक्सेबल करेंगे, ना कि कोई स्पेशल डेट पे। तो 115QA में अब कंपनी उस पर टैक्स नहीं देगी। अगर कंपनी उस पर टैक्स नहीं दे रही है 1034A का एग्जेम्पशन भी नहीं मिलेगा, क्योंकि 1034A बोलता है कि अगर कंपनी कोई अमाउंट डिस्ट्रीब्यूट करती है एज पर 115 और कंपनी उस अमाउंट पे 115QA में टैक्स पे करती है उस डिविडेंड पे, तो शेयर होल्डर को मिलेगा। अब जब कंपनी को रिमूव कर दिया गया लाइबिलिटी टू पे टैक्स अंडर 115QA, तो 1034A भी इस बाईबैक के लिए होल्ड गुड नहीं करेगा। 46 से क्या बोलता है कि कैपिटल गेन अब हमारा राइज नहीं होगा, कि अब पहले क्या था कि कोई भी लमसम पेमेंट मिलेगा तो उसको हम लोग कैपिटल गेन बोल सकते थे, लेकिन जब इस बाईबैक को हम लोग ऑलरेडी डिविडेंड मान चुके हैं नए सेक्शन की वजह से, तो इसको हम लोग कैपिटल गेन नहीं बोलेंगे। लेकिन हम SSC बोलेगा कि मैंने तो कॉस्ट इंकर किया था, मैंने तो उसको परचेज करने के लिए कॉस्ट इंकर किया था, उसका मैं क्या करूँ, वो तो मतलब डेड लॉस हो गया। तो इनकम टैक्स एक्ट ने उससे बेनिफिट दिया, फाइनेंस एक्ट ने उससे बेनिफिट दिया कि आप इस लॉस को कैरी फॉरवर्ड कर सकते हो, चाहे शॉर्ट टर्म नेचर का चाहे लॉन्ग टर्म कैपिटल नेचर का। आप इसको कैरी फॉरवर्ड करके अगले 8 ईयर्स तक नॉर्मल टर्म्स में आप इसको कैरी फॉरवर्ड कर सकते हो 8 ईयर्स तक, और इसको आप सेट ऑफ कर सकते हो जैसे कैपिटल गेन्स कैपिटल लॉसेस को अदर कैपिटल लॉसेस को आप सेट ऑफ करते हो, उसी तरीके से आप इसको सेट ऑफ कर सकते हो। तो एक सेक्शन 222F ने 3 अलग अलग सेक्शंस को चेंज कर दिया, और वो इम्प्लाइड चेंजेस है, क्योंकि वो उसके हिसाब से उसको चेंज होना मैंडेटरी था. Coming to TDS, the amendments are applicable from 1st October 2024. Now, Section 192. Section 192 says about some amendments which are applicable under Section 2B. So there 1C and 2A, those are the typo errors. We can avoid it, no problem. In subsection 2B, they say that the section is substituted. So what they have done, they have increased the scope of TDS under 192 subsection 1. They have extended the scope to TDS deduction under 17B and 17BB. What does this say? That if any TDS is deductible under section due to order under section 119 or the CBDT order or something, CBDT circulars, then that also TDS scope will be there. 192 has been extended to that extent. This also is not relevant for the exams. 193. 193 says on some certain government securities, certain government that interest whatever is received on some government securities is not liable for TDS deduction, tax deduction, if the interest received is up to 10,000 rupees with SSC during a financial year. So one new security is there, floating rate saving 2020 taxable. So that security also, it is not, TDS is not liable if the interest is up to 10,000 rupees. Other securities are also there. 194. Now there's a provision 222F. We heard that dividend is there, that is treated as dividend. So now if dividend is dividend, then 194 TDS will come into play, that whether this TDS will be applicable on this dividend or not. So 10% TDS under 194 will be applicable on this buyback, which is treated as dividend in the hands of the shareholders. Now coming to 194C. 194C, rate change is not there. Nothing is changing in the rates, only the meaning of work has been changed over here. There were some expenses which are going under 194J. People were getting confused whether this should be treated as 194J or 194C. So now what they have done, they have brought it here as 194C itself. According to new amendment, now meaning of work for the purpose of this section shall not include. They have removed sum referred to in 194J1. If any sum is received, if any sum whatever is being paid by the SSC and TDS is liable, it is in the nature of 194J. If it is in the nature of 194J, then it won't be treated as 194C. It is won't be treated under 194C. This means that 194J subsection 1, what does it cover? It means fees for technical services, remuneration of fees to directors of the company. Obviously, if fees to directors or remuneration to director is paid, it should not be under 192. Royalty, amount received for not sharing know-how, patent, etc. If these are there, if these incomes are there, and if any it is on the commission basis or contractual basis, then it is treated under 194J subsection 1. So TDS under 194C won't be deducted under these transactions, even if it is for a contractual basis. सो 194J का जो TDS है वो 194J में ही कटेगा, उस नीचे के ट्रांजेक्शन पे 194C में वो नहीं आएंगे किसी भी कंडीशन में. बेसिकली दिस इज टू बाइफरकेट द नेचर ऑफ ट्रांजेक्शन. सम पीपल वर सेइंग इट इज ऑफ द कॉन्ट्रैक्चुअल नेचर, सो इट शुड गो ओवर देयर. सो द फाइनेंस एक्ट हैज क्लैरिफाइड that even if it is of the contractual nature, it won't be deducted if any specific section, specifically 194J section 1 is standing over there for the section. Now coming to the next point, some certain rates are changed. This just the rate change 5% to 2% is done in some cases. 194DA, that whatever payment we are doing, payment is done in respect of the LICs. Then commission on sale of lottery tickets 194G, commission of brokerage, other commission of brokerage under 194H, payment of rent by certain individual HF 50,000 limit, 50,000 per month or part of the month rent whatever they are paying. 194IB, there also it is 2% now. Certain sum paid by individuals at HUF 194M. Apart from that, we call it 194C, 194J and 194H if anything is not covered over there. If those transactions are there by their specific individuals or HUF who are having the business income of up to 1 crore and 50 lakhs and they're transacting more than 50 lakh on any of the nature of transactions under 194G, 194G or 194H, then in that case 194M will apply. Now 5%, instead of 5%, 2% will be deducted in that case. 194A, payment by e-commerce operator to e-commerce participant, then instead of 1% it is 0.1%. Earlier it was 1%. And all these dates are effective after 30th September 2024. So if transaction is happening up to 30th September 2024, then the old rate 5% or 1% is applicable. 1% is only in case of 194A, other cases 5% will be applicable. Otherwise, if it is happening from 1st October to 2024, then new rate of 2% will apply in case of 194TA, 194G, 194H, 194IB, 194M, and 194A it will be 194O it will be 0.1%. Now coming to 194D, payment of insurance commission, whatever insurance commission is being paid other than companies, then that is applicable. Same thing, 5% is changed to 2%, but it is applicable from TDS deducted from 1st April 2025. So this is not applicable for your. So payment to insurance commission is paid at TDS deducted at 2%, effective from 1st April 2025. Now coming to 194F, there was a section case of repurchase of units of mutual funds or unit trust of India, that is omitted. Now no TDS is required on repurchase of units of mutual fund, or unit trust of India. If any repurchase is done prior to 1st October, then it is applicable, because we are studying that these amendments are applicable from 1st October 2024. So whatever these are transaction specific, whatever read the rates till now, it is transaction specific. Before the date 1st October, everything is applicable, the old rates, and after the date new rates will be applicable. Now coming to 194 IA2, sale of immovable property. What does it say? That the TDS should not be deducted if the sale of immovable property, full value of construction and stamp duty value both are below 50 lakhs. It is not applicable. This section states that TDS is not required to be deducted on sale of immovable property if the consideration and stamp duty value both are below rupees 50 lakhs. Then in that case we don't have to deduct the TDS at any rate. Proviso is added here. In this section, proviso is added that the limit of 50 lakh will be checked for all the transfers included in the transaction, and individual wise limit will not be checked. So like for example, one example is given over there. I'll continue with the same example. 90 lakh is the sale consideration, and one person we are paying 45 lakh. He cannot say that the per party, per vendor consideration is below 50 lakhs, so we don't have to deduct TDS. That is not the stand we can take. If the total sale value of consideration is more than, or stamp duty value, any kind of thing is more than 50 lakhs, then we have to deduct TDS. That 45 lakh paid to each person. So 45,000 for both the individuals, we have to deduct the TDS in that case. Now coming to section 197. Section 197 says about the lower rate of TDS. So that can be claimed for 194Q also. Lower rate of tax we can claim for 194Q also now. That section is added by Finance Act 2024. Now coming to section 206C. 206C actually multiple places it is being amendment. Like there are various amendments in 206C which is applicable from different dates. Now, so we'll complete this one at the last. Now coming to the TDS applicable from 1st April 2025, whatever TDS is required. Like TDS is transaction specific. So whatever transaction is happening from 1st April 2025, TDS rate should be applicable. TDS should be applicable on those transactions. Now 194T, they have introduced a new section over there. That any firm making payment to any of its partners in the nature of salary, remuneration, bonus, commission, interest exceeding rupees 20,000 shall deduct 10% on such payment at the time of credit of payment, whichever it is earlier. 194T is introduced. Earlier forms of paying salary, remuneration, bonus, commission, or interest to the partners. Now, if the firm is paying any amount in these natures exceeding 20,000 rupees, then 10% has to be deducted at the time of payment or credit, whichever is earlier. This is a new section which will be applicable from 1st April 2025 for the transactions happening from 1st April 2025. Actually, this is not applicable for your exam, so this will be changed. So we have to wait for ICI clarification. Like we have to wait for the ICI or ICMA clarification whether it is applicable, because it should not be applicable. Coming to section 198. 198 is amended to include any sum paid as income tax outside India. So if any sum is paid outside India, then credits are available in India for those sums. So it is talking about amendment in that section. This section is amended to include any sum paid as income tax outside India by way of deduction on which SSC is allowed to claim tax credit under income tax act shall be considered as deemed income of the SSC. This means tax withheld outside India is deemed as income for company total income. Suppose a person is there, his income is 10 lakhs in India, 5 lakhs outside India, and he's getting 50,000 tax deducted over there. So whatever tax is withheld over there, like tax deducted is there, he's receiving 4.5 lakhs over there, but tax deducted 50,000 also tax is deducted over there. So he is given credits. He's given credit for the tax whatever he is doing based on the DTA section 1990A 91 will come into the role. So he is getting the tax benefits over there for the taxes paid outside India. So that income, whatever he has withheld outside India, whatever is withheld outside India in his case, should be treated as his income. This is the amendment to section 198. Moving forward to section 200. Section 206C is pending, that will complete at the end because multiple amendments are there. Section 200. Now, what is this? Employer is allowed to file rectified TDS statement to the prescribed authority, but now proviso is added that such rectified TDS statement shall be filed within 6 years from the end of the financial year in which TDS statement is required to be uploaded. This is saying employer does not have any time limit. Employer can file the rectified TDS statements, whatever it is there. Employer can file the rectified TDS statements that this is the mistake, and they are filing the revised TDS. But there was no time limit to do that. So one provision is added in section 200 that employer can rectify it, he can file, but it should be filed within 6 years from the end of financial year in which TDS statement is required to be uploaded. Suppose any TDS return is required to be uploaded, quarterly is uploading, so that return is required to be uploaded by 31st May, March quarter. So he has to upload that TDS return, but he has not uploaded. So it was required to be uploaded in the financial year. I'm talking about the financial year 24-25. So if it is 24, so by 31st May 24 he has to pay it, but he has not done it. So when the financial year is ending, 24-25 is ending, so from there he has 6 years, 26, 27, 28, 29, 30, 31. So he can rectify the TDS returns whatever he has filed for pertaining to 31st May 2024 up to 31st March 2031. This amendment is there that 6 years time limit is introduced over here. Section 200A. The scope for CBDT to make a scheme in case of TDS statement or other statement filed by any person not being director as created, but no scheme is notified till now. So any for TDS statement any scheme can be made by the CBDT, but this is not notified till now. So this is not applicable for your exams. Section 201. What does section 201 say? In section 201 there is amendment. Earlier what happened? Earlier, failure to deduct tax from resident did not have the deeming impact of making such tax deductor an assessee in default after a period of 7 years from end of financial year in which the payment is made or credit is given, or 2 years from the end of financial year in which correction statement is filed under the provision of 200A(3), whichever it is later. Now this section is, what was the provision earlier? This one 201. What was the provision earlier? That whenever any resident if any assessee is paying any amount to any resident and he is not deducting any tax, failure to deduct tax from resident, then the deductor was not treated as assessee in default. He was treated as assessee in default only up to a period of 7 years from the end of financial year in which the payment is made or credit is created. Okay, so suppose payment is made in the financial year 24-25. So 7 years from the end of the financial year 24-25 till financial year 32, we are ending March 32, he was treated as assessee in default. He was not treated after that. Or 2 years from the end of the financial year in which correction statement was filed. The provision of suppose 24-25 he has made the payment 24-25. So and correction statement is filed in the year 31-32. Then what will happen? That he was not treated as assessee in default after a period of 7 years from the end of the financial year 24-25 or 2 years from the end of the financial year 31-32. So 24-25 is the payment year. So 7 years from there till 31-32 till we are ending March 32. He can be treated as assessee in default. He will not be treated after that. But the other provision, 2 years from the end of the correction statement 31-32. So from the end of that FY, so till 34. So in the given case, what was the condition earlier? That he cannot be treated as assessee in default after 34 in this case. So 7 years from the end of financial year in which the payment is made and 2 years from the end of the year in which correction statement is filed. Now what is this? What is the amendment? It is amended to provide that deeming provision will not apply for not deducting tax from any person including non-resident, or not apply for not deducting tax. This deeming provision will not apply in case the person who's include this one is paying any sum to his non-residents and is not deducting the amount after a period of 6 years from the end of financial year, the payment is made, credit is given. But 2 years from the same thing is the non-resident. Case of non-residents, this more than now what does it say? That if payment is made to non-resident, so 6 years limit will be there from the end of financial year. So what is happening over here in 201, that suppose a person is there who is making the payment to resident and non-resident in the financial year 24-25, then and the correction statement is filed in the financial year 30-31. So what is happening over here? 7 years from the end of the financial year 24-25 we'll see, that is 31-32, and 2 years from the end of the financial year 30-31, that is 32-33. For whichever it is later, till that date we will call him the assessee in default. After that we cannot call him assessee in default. Now it was only applicable for residents. Now for non-residents, instead of 7 years we will take 6 years, other things will remain same. Again 206 some amendments are done which are applicable from 1st April 2025. So 1st April 2025, whatever TTS amendments are applicable is not applicable for your exam. Notes will be updated and put on the YouTube itself. Now coming to the amendments applicable from 23rd July 2024. There are few amendments which are applicable from 23rd July. Again, some amendments are there in 206C which are applicable from 23rd July 2024. Coming to section 196B. TTS in case of units referred in section 115AB. So 115AB, some units are referred over the non-residents. So TTS section under this section has been changed in parity with changes of written 115AB with 115AB. If any tax rates are changing for non-residents, then TTS accordingly has to change. TTS is at the 10% respect of income and from units under 115AB11, whatever units are referred in 115AB1, that 10% is there, and TTS is 10% on LTCG, long-term capital gain on transfer of units under 115AB or transfer before, and if it is transferred after, then 12.5% TTS will be there. So for non-residents, whatever rates of taxes are there, we are deducting tax at the same rate itself. So this is the point. 196B and 196C has been changed accordingly for 115AB and 115AC for these transactions itself. Now coming to 206C, what are the changes brought in 206C? Let's start from the starting. 3 changes are done. 206C. 1 second. First change is from 1st October 2024. Subsection 9, 206C subsection 9 is being amended, and some new subsection is also inserted. On an application made by buyer for collection of tax, this is basically collection of taxes. On any application made by the buyer for collection of tax at lower rate is now allowed in case of section 206C1H. So if a buyer is applying that tax collection in my case should be at a lower rate, then 206C1H should be allowed along with section 206C1 and 206C1C. This means if the buyer is eligible for tax collection under 206C1H and such buyer makes an application, then AO may issue a certificate to this effect after considering the given factors. So what does it mean? That if the assessee is eligible that his tax should be deducted at the lower rate, then he can make an application, collected at the lower rate, then he can make an application that my tax should be collected at a lower rate, and in that case AO may pass an order, may give a notice, that certificate. Now a new section, subsection section 12 is inserted. New section has been added, new subsection has been added to provide that no tax shall be collected or collected at lower rate for person, class of person associated. So this section is inserted, this subsection is inserted that if CG says that for this person, central government says for this kind of person, this category of person, this class of person, associations or whatever nature of SSC might be there, TDS should not be deducted at lower rates. So it should not be deducted or collected at lower rates, and it should not be collected at lower rates in any case. This is applicable from 1st October 2024, which means that whatever rates are there before this, if it is there, then this won't apply. Then from 1st April 2025, some changes are done in 206C. So what are the changes? 3 changes are there. 2 amendments and 1 newly inserted subsection is there. So 3B is amended. Proviso is added in subsection 3B that similar amendment as given in section 200 is brought in case of TTS. What does 200 say? 200 is saying about the time limit for filing the rectified return. So similar amendment is done for the tax collection at source. 6 years from the end of the financial year in which it is required to be delivered. So similar amendments are there. In subsection 7 also, now payment of TCS, the government attract non-payment of TCS to the government attracted interest at 1% from the rate of tax was collectible up to the date it was actually paid. So on the date it was collectible to the date of payment, 1% TCS, this one interest will be applicable. Now interest will change and two rates will apply. So from collectible to collection it is 1%, and from collection to actual payment it is 1.5% now. Now one new 7A newly inserted subsection is there. Earlier there was no time limit to deem a person to be assessed in default if he fails to collect the taxes on time. And same thing, that 6 years time limit will be there. It will be 6 years or 2 years from the end of the financial year. He will be treated as assessee in default. Now coming to the last 206C, last amendment, which is applicable from 23rd July itself, that subsection 1F is substituted and new subsection 4 is amended. Earlier this section was applied only on motor cars, that 206C, but now it is amended to include other goods notified to central government. The central government will notify. So generally it is done to include the luxury goods over there, but till now it is not notified by the central government what goods should be included over there. Subsection 4. Credit of tax collected can be given to any other person also who is eligible for such credit. It can be given to collection, if any other person is eligible, that credit limit can be given to that person. Earlier was not there and credit was allowed only to buyer. Now apart from buyer also, if the person is eligible, he can claim it. And in case of minor child, that no tax planning should be done. So in that case, it is, if the minor's income is clubbed, then it is allowed the TDS deduction also. Now finally, once more revising the TDS in a lame language in Hindi, that सेक्शन 192 बोलता है कि अगर 119 के ऑर्डर में CBDT का कोई सर्कुलर आता है या कोई ऑर्डर आता है वो सेक्शन 119 के अंडर में, तो उस पर उसका भी स्कोप हम लोग TDS में इंक्रीज़ कर देंगे. 192 में TDS उसमें भी कटेगा. 193 बोलता है कि जो अदर्स इंटरेस्ट है गवर्नमेंट सिक्योरिटीज़ वगैरह पर 10,000 तक इंटरेस्ट मिलने से हमारा TDS नहीं करता है, तो उसमें एक फ्लोटिंग रेट सेविंग टैक्सेबल बॉन्ड्स 2020 का जो 2020 में आया था वो भी हमारा एग्जाम्प्ट हो जाएगा अगर इंटरेस्ट 10,000 तक है. तो 222F में डिविडेंड हम लोग टैक्सेबल कर दे तो 194 में उसका TDS में लोग 10% डिडक्ट करेंगे. 194C में बोलते हैं कोई भी ऐसा नेचर ऑफ एक्सपेंस जो 194J सबसेक्शन 1 में कवर्ड है उस नेचर का है, वो 194C के कॉन्ट्रेक्चुअल नेचर में आने के बाद भी उस पर हम लोग TDS डिडक्ट नहीं करेंगे. ये क्लैरिफिकेशन है एक तरह का. और बाकी कुछ था 194DA यानी कि पेमेंट एंड डिस्पोर्ट ऑफ LIC कमीशन वगैरह लॉटरी टिकट पे 194G में, अदर कमीशन ब्रोकरेज 194H, 194IB का रिडेंट बाय इंडिविजुअल 50,000 वाला पर मंथ वाला, 194MA, 194CJH का जो एक्सपेंसेस है जो वहाँ कवर नहीं हो रहे, जो यहाँ SSCs कवर हो रहे हैं उनके लिए, ये सारे केसेस में 5% की जगह 2% इफ़ इट इज़ आफ्टर 30 सितंबर, बट इफ़ इट इज़ अप टू 30 सितंबर एंड 5% ही डिडक्ट करेंगे हम लोग. 194A में अगर ई कॉमर्स पार्टिसिपेंट को कोई पेमेंट मिल रहा है ऑपरेटर की तरफ से तो अप टू 30 सितंबर 1%, अदरवाइज आफ्टर 30 सितंबर 0.1%. 194D में इंश्योरेंस कमीशन का पेमेंट वगैरह कर डालते हैं कंपनी को तो 5% की जगह 2% लोग डिडक्ट कर सकते हैं, बट दिस इज एप्लीकेबल फ्रॉम 1 अप्रैल 25, नॉट अर्ली फॉर एग्जाम्स. 194F में बोलते हैं म्यूचुअल फंड और यूनिट ट्रस्ट ऑफ इंडिया के यूनिट्स के रीपर्चेज पर जो TDS लगता था वो विथ इफेक्ट फ्रॉम 1 अक्टूबर रिमूव हो चुका है. अप टू 30 सितंबर इट विल बी एप्लीकेबल. फिर उसके बाद ये बोलते हैं 194IMA की ये क्लैरिफिकेशन आया कि पार्टी वाइज हम लोग नहीं देखेंगे इसमें, ओवरऑल फुल लाइफ कंसिडरेशन और स्टैम्प ड्यूटी वैल्यू दोनों में से कोई भी चीज़ अगर 50 लाख को क्रॉस करता है तो हम लोग को TDS डिडक्ट करना पड़ेगा. नो मैटर 50 लाख क्रॉस करता है लेकिन हम लोग लोअर फुल लाइफ कंसिडरेशन 110% का जो क्राइटेरिया है उसमें फुलफिल होकर के लोअर कंसिडरेशन हम लोग ले रहे हैं, एक्सेप्ट कर रहे हैं, फिर भी अगर 50 लाख को क्रॉस कर चुका है जैसे कि यानी कि स्टैम्प ड्यूटी वैल्यू 52 लाख था एंड कंसिडरेशन वाज 48 लाख, सो इट वाज नॉट मोर देन 110%. ये 110% से ज़्यादा नहीं था, ये एक 110% से ज़्यादा नहीं था कंसिडरेशन के स्टैम्प ड्यूटी, बट फुल वैल्यू ऑफ कंसिडरेशन इज 48 इटसेल्फ. 50 के नीचे ही है, 50 लाख के नीचे ही है, लेकिन स्टैम्प ड्यूटी वैल्यू 50 लाख के ऊपर था तो TDS डिडक्शन यहाँ बनता है. नो मैटर वॉट अमाउंट वी आर टेकिंग, TDS डिडक्शन उस पर लेने का इंडिविजुअल लिमिट्स पर नहीं बनेगा, टोटल पे ही बनेगा. 197 ने बोला कि 194Q में भी हम लोग लोअर रेट ऑफ टैक्स ले सकते हैं. 206C बोलता है कि 206C में 6-7 सबसेक्शंस में अमेंडमेंट्स है. एक अमेंडमेंट है कि 206C का भी अब जो है बायर भी लोअर रेट क्लेम कर सकता है. और अगर सेंट्रल गवर्नमेंट 9 में बोला 12 को इंसर्ट करके बोला कि सेंट्रल गवर्नमेंट अगर बोल देगा इसके लिए टैक्स कलेक्शन का लोअर रेट नहीं अप्लीकेबल होगा तो नहीं होगा. ये 1 अक्टूबर से. फिर 206C का कुछ अमेंडमेंट्स था जो 1 अप्रैल से अप्लीकेबल था, जो बोलता है कि 3 सेक्शन था, 3B और 7 में अमेंडमेंट था जो कि प्रोविजन ऐड हुआ कि विद इन अ पीरियड ऑफ 6 ईयर्स वाला रेक्टिफिकेशन ऑफ जो रिटर्न था सेक्शन 200 में TDS रिटर्न पर रेक्टिफिकेशन था, वही यहाँ पर भी रेक्टिफिकेशन का बात किया. और गवर्नमेंट इंटरेस्ट लेता था 1% फ्रॉम द रेट ऑफ 6 ईयर्स, 1% 1% से ज़्यादा नहीं था. कंसिडरेशन के ऊपर था तो TDS डिडक्ट नहीं होगा. ये फर्स्ट अक्टूबर से. फिर 206C का कुछ अमेंडमेंट्स था जो 1 अप्रैल से अप्लीकेबल था, जो कि प्रोविजन ऐड हुआ कि विद इन अ पीरियड ऑफ 6 ईयर्स वाला रेक्टिफिकेशन ऑफ जो रिटर्न था सेक्शन 200 में TDS रिटर्न पर रेक्टिफिकेशन था वही यहाँ पर भी रेक्टिफिकेशन का बात किया. और गवर्नमेंट इंटरेस्ट लेता था 1% फ्रॉम द रेट ऑफ collectible to the date of payment. Now it is collectible to date of collection. 1% from collection to actual date of payment. 1.5% हम लोग अब लेंगे. 7A में न्यूली इंसर्ट कर दिए कि डिफ़ॉल्ट के केस में हम लोग उसको सेशन डिफ़ॉल्ट नहीं मानेंगे. भाई नॉन रेजिडेंट का जो क्लॉज देखा आया था कि 6 ईयर्स और 2 ईयर्स वाला डेट देखते हैं, वही यहाँ पे भी देखेंगे. जो 24/5 फाइनेंशियल 24/25 31/32 का जो एग्जांपल दिया था वही वाला. फिर उसके बाद में 23 जुलाई से कुछ अमेंडमेंट्स आया है. 2 अमेंडमेंट से 1F सब्स्टिट्यूट किया गया है कि मोटर कास्ट पे जनरली एप्लीकेबल, लेकिन सेंट्रल गवर्नमेंट और गुड्स नोटिफाई कर सकती है काइंड ऑफ लग्जरी गुड्स. इंटेंशन इज दैट, लेकिन अभी तक किया नहीं है. लेकिन सब सेक्शन 4 बोलता है कि कोई और अगर एलिजिबल है तो उसको भी हम लोग क्रेडिट दे सकते हैं, सिर्फ बायर को नहीं मिलेगा, कोई ज़रूरी नहीं है उसके लिए. लेकिन अगर माइनर को देना है तो माइनर का इनकम उसके पेरेंट्स के साथ में क्लब होना चाहिए. अदर प्रोविजंस का था 206C के अलावा कि 194T आया था 1 अप्रैल 2025 से कि 220 1 अप्रैल 2025 से, जो एग्ज़ाम के लिए एप्लीकेबल नहीं है. TDS के से 1 अप्रैल 2025 से जो भी प्रोविजन अप्लाई हो रहे हैं वो आपके एग्ज़ाम के लिए एप्लीकेबल नहीं होंगे, क्योंकि वो ट्रांजैक्शन TDS इज ऑलवेज ट्रांजैक्शन स्पेसिफिक कमिटमेंट्स. सो 10% TDS डिडक्ट करेंगे हम लोग इसमें 20,000 के ऊपर अगर हम लोग कोई पेमेंट करते हैं, सैलरी, रिम्यूनरेशन, बोनस, इंटरेस्ट या कमीशन का. तो क्रेडिट ऑफ पेमेंट विच एवर इज एलिजिबल और 10% डिडक्ट कर लेंगे. 198 बोलता है कि बाहर से जो इनकम हमको मिलता है विथहेल्ड हो जाता है, जो भी इनकम बाहर फॉरेन में हम लोग कमाते हैं वो हम लोग को रिटर्न इनकम इंडिया करना पड़ेगा. फिर हम लोग उसमें बेनिफिट ले लेंगे 1990 या 91 के हिसाब से. फिर 200 बोलते हैं कि TDS का जो रिटर्न होता है 6 ईयर्स के अंदर अंदर फ्रॉम द एंड ऑफ द फाइनेंशियल ईयर, जिस साल उसको होना था रेक्टिफाई, उसके 6 मंथ्स के अंदर अंदर उसको लोग रेक्टिफाई कर देंगे. 200A बोलता है कि TDS के लिए कोई नया स्कीम बनेगा, लेकिन अभी तक बना नहीं है तो रेलिवेंट फॉर एग्जाम नहीं है. 201 बोलता है कि कोई अगर फेलियर हुआ तो सेशन डिफॉल्ट के लिए रेजिडेंट को पेमेंट हो रहा है तो 7 ईयर्स एंड 2 ईयर्स का क्राइटेरिया देखते हैं, और अगर नहीं तो 6 ईयर्स फ्रॉम द एंड ऑफ 24-25 नॉन रेजिडेंट के 6 ईयर्स एंड 2 ईयर्स देखते हैं. टर्म पेमेंट ईयर एंड ऑफ FI ऑफ द पेमेंट और फ्रॉम द 2 ईयर्स फ्रॉम द एंड ऑफ द कलेक्शन FI. फिर उसके बाद 196C में वही 115A भी 115AC के टैक्स रेट्स में जो चेंजेस हुआ कैपिटल गेन में, वही सेम रेट में लोग TDS डिडक्ट करते हैं. यहाँ पे ये बात बोला गया है. तो ये हमारा हो गया. एंड ऑल द नोट्स वट एवर इज इट विल बी अमेंडेड, लाइक वट एवर रेलेवेंट चेंजेस आर रिक्वायर्ड एंड विल बी अपलोडेड ऑन YouTube.